They say the market's a pendulum, swinging between greed and fear. Well, Michael Saylor seems to have cut the rope and turned it into a bungee cord, one powered by Bitcoin's volatility. Buckle up, folks, because we're diving into the chaos that is MicroStrategy, where risk isn't just tolerated, it's actively courted like a bad financial romance. Let's start with the obvious. Everyone talks about MicroStrategy as a Bitcoin juggernaut. With over 150,000 Bitcoins on its balance sheet, valued at more than $4 billion, it's easy to think Bitcoin is the star of the show. But here's the twist. Bitcoin might just be the supporting actor, the real MVP volatility. Yes, those unpredictable, heart-palpitating market swings that make even seasoned traders question their life choices. For MicroStrategy, those aren't problems, they're opportunities. Now, here's where it gets interesting. MicroStrategy's stock doesn't just reflect Bitcoin's price movements, it amplifies them. When Bitcoin jumps 10, MicroStrategy often leaps 20%. When Bitcoin drops 15%, MicroStrategy might plummet 30%. It's like Bitcoin's more dramatic, attention-seeking cousin. Why does this happen? Because Michael Saylor has turned his company into a high-leverage Bitcoin play, and Wall Street loves a good spectacle. It's like watching a trapeze artist without a net. Thrilling, but you know there's a chance of disaster. But wait, there's more. MicroStrategy isn't just passively riding this volatility wave, it's actively monetizing it. Let's talk about their favorite tools, convertible bonds and stock offerings. First up, convertible bonds. These financial gems allow MicroStrategy to borrow money at low interest rates, promising bondholders they can convert their debt into stock if the share price soars. Think of convertible bonds as the financial equivalent of a buy now, pay later scheme. Except MicroStrategy's payment plan hinges entirely on Bitcoin, not face planting. And then there's the stock sales. MicroStrategy has raised billions by issuing new shares, cashing in on the skyrocketing stock price that follows Bitcoin's meteoric rises. Every time Bitcoin gets a boost, MicroStrategy's stock goes wild, and the company seizes the moment to rake in cash. It's like a never-ending game of buy low, sell high, except they're selling their own equity and doubling down on Bitcoin like it's the last horse at the track. Let's not forget the underwriters, the quiet MVPs in this drama. Every time MicroStrategy sells stock or issues bonds, these financial middlemen rake in fat commissions. They don't care whether Bitcoin moons or crashes, as long as the transactions keep flowing. For them, volatility isn't a risk, it's a reliable revenue stream. If Bitcoin's a roller coaster, the underwriters are the ones running the ticket booth, smiling through it all. Now here's where the math gets fun, or terrifying depending on your perspective. MicroStrategy's stock price is tied to Bitcoin's performance, but not in a 1-to-1 ratio. Oh no, this is a leveraged play. If Bitcoin gains 50%, MicroStrategy's stock might double. But if Bitcoin crashes 50%, MicroStrategy's stock could go up in flames, leaving shareholders clutching their portfolios and praying for a Hail Mary rebound. Speaking of shareholders, let's spare a thought for them. Imagine waking up to a 20% drop in your MicroStrategy stock because Bitcoin had a bad day. That's the reality of owning shares in a company that thrives on volatility. But hey, Michael Saylor has made it clear. He's playing the long game. According to him, short-term turbulence is just the price of admission to Bitcoin's promised land. And if you're not on board with that, well, the exit door is over there. But here's the kicker. Volatility isn't just a side effect of MicroStrategy's Bitcoin strategy. It is the strategy. By embracing the chaos, Saylor has turned his company into a financial roller coaster that traders can't resist. Options traders, in particular, are having a field day. The implied volatility on MicroStrategy options is off the charts, offering massive potential payouts for those willing to brave the ride. It's Wall Street's version of bungee jumping, high adrenaline, high stakes, and definitely not for the faint of heart. Now, let's zoom out for a moment. What does this mean for the broader market? MicroStrategy has essentially become a proxy for Bitcoin, which means it's dragging traditional finance into the crypto world, kicking and screaming. Institutional investors who wouldn't touch Bitcoin with a 10-foot pole are suddenly exposed to its volatility through MicroStrategy. It's like sneaking kale into a brownie, sneaky, effective, and polarizing. Of course, not everyone is buying into Saylor's vision. Critics argue that tying a public company's fate so closely to a volatile asset like Bitcoin is reckless. They point to the dot-com bubble when companies made big bets on unproven tech and ended up as punchlines. But here's the thing. Saylor isn't betting on some newfangled gadget. He's betting on Bitcoin, the digital gold, the decentralized dream, the asset that promises to disrupt everything. Whether you see that as genius or lunacy depends on your faith in crypto. Let's not ignore the historical irony here. In the late 90s, MicroStrategy was making headlines for an entirely different reason. Accounting scandals. Yes, before Saylor became the Bitcoin evangelist, he was the guy whose company's stock tanked after an earnings restatement. Now he's back in the spotlight, but this time the stakes are even higher. If Bitcoin succeeds, Saylor will be hailed as a visionary. If it fails, he'll go down as one of the most colorful cautionary tales in financial history. So, what's the takeaway here? For Micheal Saylor, volatility isn't a problem, it's an opportunity. For MicroStrategy, Bitcoin isn't just an investment, it's an identity. And for the rest of us, it's a front row seat to one of the most fascinating experiments in modern finance. Will Saylor's strategy pay off? Or is this just a house of cards waiting to collapse? Only time and Bitcoin's price will tell. Don't forget to like, subscribe, and share your thoughts in the comments. Are you team volatility or team stability? And would you take this wild ride or stick to safer ground? Let's hear it. See you next time.